Hello, everyone. Good morning, Sterling. Thank you for putting in all the earnings and the news. How are you doing today? Of course, buy NVIDIA AMD amid deep seek sell-off. Well, everybody also bought Apple yesterday. Apple didn't have an egg working AI. Oh boy, it's going to be dump the dip on retail. That's what's going to be the theme. Dump the dip. Dump the dip on retail. That's what I think is going to happen. All right, don't need to get through all of this. We have a durable goods come out this morning, but not really market moving. By the way, tomorrow will probably, a 90% chance, will not be a live stream. If I do one, it will be at least an hour earlier. Okay, I will be driving during the normal live stream time to get to an appointment. So, that's where we sit. What are they? Morgan Stanley cuts target price to 152 from 166, but we should all buy it, right? It's just this is going to destroy retail at some point. Good morning, Patrick. Yeah, see, here we go. Retail investors bought record 562 million of Nvidia stock during DeepSeek led rout. And I mean, this can bounce, but it's going to bounce straight into resistance. Good morning, John. Good morning, Heinrich. What else do we have? Thank you for putting in the earnings also. Good morning, Jacob. We got Boeing was a miss. Boeing's just a disaster. General Motors beat. Royal Caribbean, a beat miss. SAP, a beat. Lockheed Martin guided down and a beat miss in revenue. Raytheon was a beat. JetBlue was a beat. Thank you for putting in all that. Good morning, Royal Palms. We don't need to go through some of these other smaller ones. Good morning, McRangers. Hey, Chris from Baltimore. Welcome. Good morning, Tony. Good morning, Eric. Good morning, Anissa. Hello, Charles. All right, we got everybody in who's in here so far. Let's get straight to it. We had a very eventful day yesterday, so let's look at the key levels. Now, remember, the Fed is coming up tomorrow. So, unless we get some key momentum, I'll give you the key things I'm watching for support and resistance. Unless those are broken, I'm erring on the side of could be a choppy day. Thank you, Royal Palms. Again, we had durable goods. The month-over-month headline number coming in way below consensus, but X transports, or some people call it the core, still coming in below consensus, but bouncing from prior. Nothing really market moving there. We had the home price index coming out right as the stream started. I didn't see Redbook, and it's not on here yet. There it goes, 4.9, so slight bounce from prior. What else do we have that's important today? Not much. We have the Richmond Fed Manufacturing Index, the Dallas Fed Services Index, and then some note and bill auctions. So that's where we sit. Remember, tomorrow is the Fed meeting. So far, we look to still be buying the chip dip. Buying the chip. We got Oracle still bouncing with AI stuff. Google and Meta. Meta actually rallied pretty well yesterday to new highs. So things are trying to get shrugged off pretty quickly here. I'll show you exactly where I'm watching for the bounce to hold. Technology, utilities, comm services leading. Consumer defensive. So we rotated to the consumer defensive yesterday a little bit. Now rotation back into the technology. Fed Watch still has a pause priced in. So if Powell did not pause tomorrow, that would surprise the markets. Probably make Trump happy if he cut it again, but it would not help the inflationary aspect. What else do we have here? We now just have 2 cuts priced in for the year, up from 1 to 2 based off that market price yesterday, and we're back in fear mode, and the markets aren't cheap. Show our PE closing in on 38 again. We already went through the earnings after the close. I guess we had SAP this morning, so that was wrong. Starbucks after the close, Logitech, not much, and ASML, the big one tomorrow before the open. So Good morning, Martinez. Good morning, Mark. Sure, we can go over Apple. Royal Palms. I agree. And you know what? YouTube's back to wanting comments. So if you can take, even just say hi in the comment, just say something. If people could do that, it might help. So, what am I keeping an eye on with here? Again, we bounce back. This is a very key level. This is around 60.37, 60.36 area. See it right here is prior key resistance and a dip below here before back on the 25th of January and snap back up. If you do some candlestick math here, this would leave a very long tail below here also. You can somewhat see it on the daily. It bounced back a little higher. The key level though I'm watching is on this 4 hour, the 60.37. So that's my key support. If we did break down below there, I can't get overly bearish unless we get back below 60.1850. To the upside, I'm watching for a break roughly around 60.73. Otherwise, that will be very key resistance. This will be a very key resistance area. Okay? Trying to jump above it there and got rejected, tested it here, then finally got through it, retest again that area. That's the area I'm watching and confirmed there. Coming back down, stopping, finally broke, and now we've retested this. So that's my key resistance. So those are the two levels I'm watching. Now, in order for me to get overly bullish, based off this, it then has to follow through with a close above 60.82. Okay, so that would take it and shift the probabilities from my perspective back to where we could easily fill the gap from Sunday. But I have to see a follow through on at least a 4 hour basis with a close above 60.82. Hello, Andrea. Hey, Richard. So that's what I'm looking for. Now, to the downside, if we start breaking below the key support and then take out this support base, which is right by the 50% harmonic, any bearish bets have to follow through with a 4 hour close below 59.95. And I'll be doing the same thing tomorrow. Again, for the people coming here late, there most likely will not be a live stream tomorrow. If there is, it'll be way earlier. I'll be adjusting these same levels upside downside going into the Fed meeting. So, like if we eke out a new high this morning, I'll then use the same harmonics and just take it from the low of yesterday up to that high, and then any bearish bet has to roll over below that 62.5. Okay, the major breakdown level is right around this 21,150 for the NASDAQ. Okay, there is very key resistance coming in right around 21,388 to 21,400. That's going to be my key resistance level. My key major support is 21,150. My minor support is coming in just around this 21,225 area. Now, what does that say? In order for me to get at least bullish, we have to break through this 21,400 and hold that as support then. And that doesn't make me overly bullish. Again, it makes me minorly bullish. But then we have to follow through on any bull case, 21,594. So just remember 21,600 gets me into sustained bullish, and then I start targeting the potential gap fill over the next few days. If we can't stay above that, I'm not going to stay bullish on this because this is so far just a bounce play. Now on any shorts, you can see here, this candle set at 1300 hours, hit the 50% harmonic. So that's going to be a very key level. It's 21,000, roughly 21,093 to 21,100 is very key support. So you see that line I drew earlier, 21,150. It's going to be really tight because it comes into a pretty decent support base. But the thing then that I'm watching for, if we do break through that 21,093, 21,011 on a 4-hour closing base, and then I'll be watching for the continued rollover play. Now, 4-hour cycles are rolling over, so I'm going to be watching key support levels like the first run is 21,153 going into the open. What else do we have? We have the Dow, which rallied yesterday. We found that resistance at the 75, rallied through it yesterday, retested already today with the support, but I'm still expecting the Dow to retake 45,200 over the next couple days potentially. Major supports coming in at the gap down open yesterday, this 44,500 area. The Russell key, very key support was yesterday's low, and we've retested it today. So about this 2282 area, 2283, 2282 is support. If we break that, my next target lower is 2260. Now to the upside, we have some pretty decent resistance coming in at 2302. If we break through there, I'm watching for this big reversal candle area back at 2326 if we bounce. But again, there's nothing majorly bullish on the Russell in the short term. The VIX, after spiking up yesterday, we got the quick reversal down. We did not sustain anything. So again, unless the VIX starts climbing back above 20, I'm going to err on choppier sides or choppier to bullish side. The DAX making a nice little potential double top here, coming down, hitting the rotation zone. So again, if we break out higher in the DAX, at this point, the next targets are 21,872 and 22,099, so 22,100. If the double were to trigger, which would need a close below 21,192, it's again against the rotation zone, so the first target would be 20,966 area. All right, that's the only thing going on there with the DAX. The notes on the downward sloping trend line closing just above it, but I'm watching the yields and closing right at that horizontal neckline, so I'm not considering this triggered, by the way. It was just too close to call. And we're going into the Fed meeting tomorrow, so we need to turn and really get below yesterday's low, and then I'd start looking for a pullback in yields. But nothing yet. So far, we've just corrected with the bigger term thing to the weekly rotation zone and a prior resistance coming potential support area. So we'd really have to start taking out yesterday's lows before I could really target a pullback in yields. Dollar index also bouncing. Going to be interesting to see if this closes above yesterday's high, because that would be an aggressive percent B buy in the weekly rotation zone area. But we still have cycles going down on the weekly, so that's why it's aggressive. And a stop from my perspective would have to be below yesterday's low. Crude. Technically, if we close above yesterday's high, it would be a percent B buy. That's not a super strong one. It's come down to the rotation zone and prior support, but that would be another very aggressive one. I doubt that will trigger. It's coming into a pretty key resistance area. I'm watching for a stronger bottom to form in crude. We do not have one yet. Natty gas did trigger the double top finally. It was confirmed, remember, back on the 21st of January, but not triggered until yesterday. So we could see a continued pullback in natty gas. Targets are roughly about 344, 329, and 314 if it reaches all three targets. Gold coming into the rotation zone with the little 4-hour head and shoulders. Remember, when you're going against the rotation zones, they get tough to trade because you can find support. That's why we have the rotation zone. So a little bounce play in there. And that was a sloppy, unequal head and shoulders with the right hand shoulder and the left hand shoulder not being symmetrical, but it's not invalidated yet. Coming down to the first target area and now bouncing. So the invalidation point would roughly be a close above 2771. What else do we have? We have the yen. Trying to find some key support in here, but not any great setups right now in the yen. We'll be continuing to just watch that. The euro, after triggering again the sloppy inverse head and shoulders, and these were very sloppy patterns, did not reach the first target yet. So nothing to talk about there. Spiders, you have the huge gap behind. Keep an eye still on yesterday's high, 599.69 on any pullback, and then it would be the gap fill to the close, 599.37. Those are the key support areas I'm watching. And my next resistance level is about 602. Again, I'm not going to overthink things today going into the Fed meeting tomorrow. The Qs, yesterday's high coming in at 517.99. And we're trading 514.45, so that's going to be key resistance around yesterday's highs. It's really got to get through this 515 level though before that would even be a target, and very key support coming in about 509.65. Let's get to some other things that people want to look at. Apple. Remember, we finished a little mini double yesterday. Now this is going to be interesting. Overall on Apple, I cannot sustain anything from a bullish side unless Apple follows through on this bounce play and closes above 244.83, which I'm not expecting to. I'm expecting us to potentially get a little bigger bounce. It is against the daily rotation zone. So any more upside, I'm watching at my key level is 234.65. Now, what's interesting, if this does sustain a bounce, keep an eye on this weekly close in relationship to last week, because that would be a percent beat buy if it can hold that level through the end of the week with cycles at the bottom. Now, then I'd start more looking for the bounce towards that 244 level before a rollover play. And remember, Apple has earnings next week. This week on Thursday. Is that right? Just double check that. Hold on. Yeah, it's this week on Thursday. Yep. So that's going to be very interesting. Am I blurry? I might be a little blurry. Can we have a look at let's see, TWLO. Let's look at, we'll get to those in a second. Let's look at one thing just with NVIDIA. NVIDIA breaking very key support. There's a very now strong, significant level right or between about 130 and 132. I have 131.69. That's a key level, but I'm watching for on any bounce plays, even to that level for rollover plays. Okay, we broke the key support, but now we have a lot coming into very, very key resistance. So now the factor is back at the end of February if NVIDIA can pull another major earnings out, but until then, I'm going to treat that as very key resistance. Broadcom, Broadcom, very key resistance to 1757. So I'll be watching also for rollover plays in this, and I'm still targeting a gap fill, then to return to the 200. Now we can get to TWLO. Let me clean up this chart. Let's see here. So, just looking at this chart. Whew. That's gone on a little run recently. So built a very solid base, broke out from it, testing the 200 week, breaking up actually above very key resistance right now. So this got to really hold above this 131 level. Let's take a look at that level closer based off the daily with the gap. It's got to really hold below that. Otherwise, I'd watch for the roll over gap fill. It's still holding up nicely there, though. Let's just see what the next targets area it's the upside are. The next target area I'd use is 170 on a continued run higher with your major support, and this is the major support off the weekly coming in at 115. NLCP as a dividend play. I don't know. 10% dividend yield, P/E ratio 13. Oh, it's a REIT. That's why. Well, your key thing, I'd have to look at their holdings. I don't know anything about this, but the key thing from where I would be patient is if this closes below 1542, I'd be looking for a return to this low area from last July. Again, it's broken some key support here. This is, if you're looking for a dividend yield, I'd be a little patient on this one. I would be patient on this one, personally, because there's no bullish setup yet. And it's against the weekly rotation zone and against the daily rotation zone. So that's something I just wouldn't buy just for the yield. Yeah, this is interesting. I thank you for reminding me about your. So it triggered the double bottom, did not get to the first target, and also did not invalidate the double top. If we come down here and look, it would have had to close above this 31.22 level or trade above 32.14. It did not close above this level nor trade above the 75% harmonic. So this is still in. And this was, you know what? We're not going to need data centers anymore or power grid anymore, which everybody's been buying. This is just an overreaction, but you still have the double bottom in play. The double top is not in play anymore, was completely invalidated with yesterday's gap down. And we're back down to very key support. So this has just been a mess recently. I don't know. I think this was a major overreaction yesterday, but again, is there a new buy setup now? No, not yet. So could we still see some pressure on the price lower? Yeah. Yeah, Charles, you might want to keep an eye on that one. I just wouldn't rush into it yet, personally. Again, I can't give you specific trading advice, but I would be patient, especially with some REITs right now. I would be very patient with some real estate plays. So there's your uranium. You still have magnet prices to the downside, especially if this 27 level holds. So yeah, there's been a lot of volatility in uranium recently. It's been a mess. I was actually very shocked at that move yesterday. Okay, that's all I have for you today. Let's just peek in at the open. Again, nothing's changed. You see these two key levels on the 15-minute chart. Again, I'm going to err on the side of choppier unless we get breakdown with momentum or breakout with momentum. I'm going to err on the side of a choppier day today. With that, I will talk to everyone. Again, probably not tomorrow. It'll probably be back on Thursday, and I'll let you know tomorrow. I might do a tweet out or something else. Or if you're up, and I decided to do something that would be closer to instead of 7 a.m. my time, 6 a.m. my time, so it would be an hour earlier, and it would be a very abbreviated session. With that, I shall talk to everyone later. Bye for now.